Welcome everyone to another episode of the Everyday Trader. Good to be with you again on an update today. Update, Eric. You bullish today?
Uh, the market's bullish. That's for sure. What's the catalyst, Greg? What's making it move?
Trade the trend. The catalyst.
I mean, we got the
I want to say that
it's
people
over
trust
2%.
what's going on in Capitol Hill, but yeah, I can't say that would be rational, would it?
So we got the S&P 500 up 1.9% and the NASDAQ up 2.34% after a massive move up yesterday as well. Let me pop up here's a chart of the NASDAQ. Let me expand that out a little bit. Just
I
wow.
think I think you have to say that the move up is really about Nvidia. I mean,
Still?
I think the euphoria of people being, looking at Nvidia's earnings report this week, and of course they had blowout numbers, all about and pretty good guidance too, on what they expect for the future growth of artificial intelligence. And now I think a lot of people who have been skeptical about tech right now are having some FOMO and chasing it even higher. I mean, I'm going to be honest. Where's the number right there on the screen? Look at that, 201.94 price to earnings ratio. I have a really hard time paying $200 PE for anything. I don't care how good the AI is in the future. There's a lot of future earnings of artificial intelligence that just got priced into Nvidia overnight. So
Yesterday, one of the things that came through in this context of this sort of price. So to put things into perspective, the move up that we had yesterday was $250 billion. So $250 billion, the market capitalization of Nvidia increased by $250 billion. And the company, as you can see right now, is a market cap of almost just slightly under $1 trillion, 959.5 billion, almost $1 trillion company. Yesterday, I saw on Twitter somebody shared, and I wish I remembered who it was to give them credit. The quote, do you remember when Cisco in 2000, because I'm seeing all these 2000, 2001 sort of memorabilia. Do you remember when tech was moving and the markets weren't, and we had some crazy stuff going on in the economy, but there was the Cisco quote. Do you remember the Cisco quote back then?
I do not. I should. I remember.
Yeah, I know you know this. If I bring it up, and this is where the CEO came out and said, "Listen, if we took 100%, because it was trading at 10 times sales, that means if we took 100% of all of our revenue."
Oh, no. I know the quote you're saying. It's not that's not Cisco, it's John McAfee
McAfee,
from Sun Microsystems.
that's it, Sun
Yeah.
Microsystems. I'm sorry. Yeah. So what was the gist of the trade was if you took 100% of all of our sales and we didn't pay anybody, didn't pay any suppliers, we're still not worth that much. I was like, but if people want to pay 10x sales, that's 10x revenues. That's great. I'm not saying that that's where Nvidia is, but it's a number that's hard to fathom. The size of the market cap changing. I'm very lucky that I did a bullish trade on it the day before earnings, and I shared that with people at Trader Oasis. So they're really happy with that move, because I had a very strong indication that it was going to move. I did not think it was going to move this much, and certainly there's a lot of people you can tell who was short by listening to the screams, and it reminds me of when Alderon got snapped out, because there are a lot of people who are screaming really loud when these things came out, because I'm pretty sure some people were on the short side of it.
You're right. They're not 10 times sales right now. They're 35 times sales. 35. It's one thing to be 200 times earnings. It's another thing to be 35 times sales. And to put it into perspective, to kind of give you in layman's terms what that means is, Nvidia has to make money for 35 years at the same rate they're currently making it, and give and they won't pay any of it out just to justify their current price.
Right.
They won't pay employees, they won't pay vendors.
Right.
There's no return to shareholders at all. Just to justify, they have to grow for 35 years at the current earnings number. Sorry, at the current sales number.
So you think that's maybe a little bit over, the company might be a little overvalued?
Yeah, if there's a short opportunity this year, this is probably it. The problem about shorting it, when you get FOMO is we could go higher. I mean, I've seen stocks get this reminds me a little bit of Tesla, to be honest, and the big, huge run that Tesla had in 2021, and how overvalued it got. And even Elon Musk came out and said, our stock is overvalued right now. It should not be worth what it is. And then, of course, Tesla had a big pullback, and they're growing into their earnings, but Tesla's not even close to this overvalued as what Nvidia is currently trading at. And yeah, it's like you said, fortunately you were bullish on it going into earnings. I know I talked to a few of the students at OptionsANIMAL as well. I did our daily market update on Wednesday right after the earnings event came out, and so it was up huge in after hours, and there were a couple of students doing some hurrahs. It was probably people following you, to be honest, in that trade. Not that anyone follows you on trades, right? We don't give investing advice.
There were a few people who I know who were who gave me thanks.
Yes, they'll be buying you lunch in Austin, right?
Yeah. Yeah. So I mean, the key on those trades is not, I mean, sometimes it's a gamble, but the trade actually had a really low downside and huge potential upside. So it was a calculated gamble, and it just happened to work out. So, I mean, those things work out, I don't know, half, 3/4 of the time, and they're fun little trades to do every now and then. It's not core. What's in the core. I'll talk about, for me, I was going to ask you what you're trading. I did a trade today on Tesla. I actually did a bearish trade on Tesla, which is, in a market when it's up 6.4%. I expect that we're going to have resistance around 210. There's a historical level of resistance there. And so I placed what I call a George Costanza bear call. And for those of you that are Seinfeld fans, that Costanza is George Costanza is one of Jerry Seinfeld's best friends, and he's sort of a study in what not to do. And there's one episode where he says, do the opposite of Jerry says you should do the opposite of whatever your instinct is, because every instinct in your life has been wrong. So I place a bearish trade when I'm bullish. And part of the thinking of that is really, if you think to the next step and how do you fix a trade? I think this is the key to success for anybody to trade, is to have objective goals. And those should include two things. What do you do when the stock does what you think it's going to do? So when do you take profits? And what do you do if that doesn't happen? What happens if your trade doesn't make money? And thinking ahead of time will impact how you structure the trade. So this took me a while to figure out, but I often do a bull put. A lot of people will sell a put and as a bullish trade, and their thinking is, if the stock is dropping down, then I might have to buy the stock. That sounds great in theory. In practice, if you've been there and you've got a short put, a naked put, or a bull put, and the stock is dropping down and you take ownership, that you don't feel good about it because the stock is crashing down, and maybe you're limited with the fact that you might have a long put or something, so your risk is limited. But still, buying a stock when it's dropping doesn't feel good. On the other hand, a bear call, which is selling a call and buying a call at a higher strike, if the stock moves higher and you proactively purchase the shares, then what you're in is a covered call, which is a bullish trade, stagnant trade, with an extra long call, which has no limit to the upside. So if the stock breaks bullishly, you adjust yourself into a trade you start with a trade that's a high probability. Right now, the probability of my trade making money is 71%. So if Tesla goes sideways here until June 16th, or stays below the short call, I'll make 100% of the profit. If it goes higher, I've got a very specific threshold where I'll actually purchase shares. And I actually have other trades going on right now in Tesla. I have a deep in the money covered call that I've been able to generate some really nice premium on, but I can't right now. It looks like I can't roll that short call without increasing my risk. So I'm going to let that short call, let that stock get assigned and end up freeing up some capital. If I need to buy Tesla again, I'll get right back into it in this trade here.
I think that's an interesting point you bring up, and it mirrors a couple of trades I've got too. And what you said was the idea of letting a covered call go deep in the money and letting it get assigned. A lot of times, I know we did a recording of it's been probably 7 or 8 months ago. It was one of our first episodes we did of the Everyday Trader, where we talked about the misunderstood covered call and how a lot of people look at allowing assignment to occur with a covered call is like the ultimate risk. And we referenced a lawsuit that had happened with a Schwab client that we got called out of Apple or something like that. I'm trying to remember the details, but if you're objective about your profit goals with your investing, there's absolutely nothing wrong with letting a covered call get assigned. I've got 2 positions right now that I'm going to let that happen to. One of them's on Micron. I'm going to have a nice profit on a Micron trade that I did. That's up on the heels of Nvidia too. It's not just associated with Micron, but it's gone deep in the money. I could roll it, but you're right. I'd end up adding some debit now to roll it. I just don't want to do that. I'm just going to let it get assigned and make some money and be objective about my goals of what I'm trying to hit with my investing. Another one is just on the Qs. Again, that's gone deep in the money, and I'm okay with getting assigned. There's nothing wrong with that.
Well, there's nothing wrong with it if you're making money. And if you enter into a covered call and the short call goes in the money and you get assigned, you achieve the maximum profit of the trade. It's possible that maybe you bought the stock up here and then the stock drops down and you sell a call where you don't want to sell your stock because you lose money. But if you enter into a covered call, the maximum profit you can make is if the short call gets assigned. And this goes back there. I think we mentioned it in that recording, but there was a Barron's article that just really triggered me. I got really pissed off because the article says the risk of a covered call is if the stock goes higher, and it could not be more wrong. It's 100% the exact opposite. The risk in a covered call is if the stock goes down. Now, some of you listening are saying, yeah, but if the short call goes in the money, I got to sell my stock. Okay, so what? Well, I might miss out on making more money in the future. That's FOMO. That's not risk.
Yep.
That's FOMO.
You'll
Yes,
never
if you
go,
didn't have
you'll
the short
never-
call, what's that?
Right. I was going to say you'll never go broke making money on a trade.
Exactly.
Taking a profit.
So why don't you want to? I don't want to sell my stock. Well, you're thinking like a stock trader, or I don't know. You're not. I don't know what you're thinking about. You're thinking like a hobbyist or somebody who collects items. People collect things. People collect stocks, and there's hobbyists listening to us, and I love them because they're passionate and smart people. But let's not, let's be clear on what the goal is. The goal is to make money. There's not an item, not a stock that I own that I wouldn't sell. There's some things I wouldn't sell. My not a flamethrower from Elon Musk, I paid $500 for it. I've been offered 3,400. I don't know. Maybe, I don't know, 10 grand. If anybody wants to, I'll sell it for 10 grand. But there's probably not a reasonable. I think you should have a price on everything, on what you'd want to sell it for. I don't want to sell it for 3,400. I don't even want to sell it for 5.
I've got a fly rod. I don't know if I'll ever sell.
See, is that special one that's made by Perkins? Lee Perkins?
I don't know, but you're probably right. Somebody offered me 100 grand for it.
Yeah.
Maybe I would sell it.
This is a custom handmade fly rod from the owner of Orbis, who had it commissioned specifically for Greg. It's a very special rod. Anyways, we get a little sidetracked here.
Yeah, we started talking trading. That was actually kind of fun.
Yeah, no, it's a good idea. I mean, people want to get some insight on what's going on out there.
To answer your other questions, I'll fill out the rest of my portfolio for you. You asked what am I trading? Got a position on Disney that's not too happy with. I'll work out of it eventually. I've got a good position on Apple right now that I'm making some good money on. I've got Occidental Petroleum, which is a great covered call stock. Love that one. I entered a new position last week on Tyson Foods, actually, down at a 52-week low. I might get called out, and I've got a few weeks on my covered call left on that one, but I'll get paid a dividend here in a couple weeks on that one as well. So that's what I'm in. Like I said, and the other ones, I'm in Micron and the Qs, which I'll probably get called out on pretty soon.
Well, we're gonna do that, huh? So I'm looking at my positions too. I've got an iron condor on the Qs, which has been adjusted once already. Let me go back to the Qs here. So NASDAQ, so I placed it 2 days ago before we had two big moves up. It's already needed to be adjusted to the upside. So we'll see what happens here. I've got room to it. I got a little bit more room on the upside. It could go a little higher.
Are we at all-time highs on the NDX?
You are. Well, I could be wrong. Let me double check.
I was gonna say we got to go back to 2021, probably.
No, we're not. Yeah. So yeah, 2021.
Not quite, but we're not very far.
Well, we are 1670. We got a ways to go. Another 2,000 points.
You zoomed in, and okay, that's 2,000 points.
Yeah. I don't. Am I sharing the screen? There you go.
Yeah, yeah.
So yeah, that's a pretty big move. Man, it's interesting because tech. I remember when we were doing the end of the year review that we do in December. I mean, everything I read was that tech is done. This is NASDAQ, this is tech. So there we are in December 31st and saying tech's done. Tech is not the trade for 2023, and sure as heck has been the trade.
Yeah, I mean, from Amazon to Meta's probably been, well, Nvidia's the star now after this move, but Nvidia had already had a huge move before the big blow up. But yeah, Meta has had a huge move this year. That's another one that's really driven the NDX higher.
I don't know what the abbreviation is, but Metagma. So Microsoft, Meta, Alphabet, Google,
Magman,
tech.
It used to be Magma, but you got to include you got to include Nvidia in it now. Actually, Netflix is having a big update today too. Sorry, I know we're talking a lot of individual stocks. Maybe that's what we're the theme of the day. Individual tech.
Oh yeah, Netflix up 6.3. Wow, tech is just getting. This is. I don't know. There's some other narrative. There's something missing. Some data I'm missing. I don't have all. I don't have.
I think
there's something going on here that's beyond what's apparent. Because from a economic standpoint, from a news standpoint, I mean, if it was I guess the S&P 500 is up quite a bit. I mean, is this real hope that we're going to make progress on the debt ceiling? Is that what this is?
That's what I think it is. Now, I don't know if I'd call it real hope, but I think maybe it is. Maybe the news is already out, and this is senators out there getting their orders filled before the announcement actually happens that the debt ceiling gets raised.
I got to tell you, my read on the debt ceiling is that it's going to be a buy the rumor, sell the news thing. So it's all rumor right now. This looks like a classic setup. And when the news comes out, we're probably going to sell off. That's actually what I'm banking on with that iron condor that I have. Oh,
well, I think I have to agree with you, because the other issue that's going on is the Fed is not going to cut rates at all. I also don't think they're going to pause. I think we got another rate increase coming in a couple of weeks.
Well, a week ago, we were at a 17% probability of a rate hike, and everybody was saying we're done. Right now, we got a 66% chance of a rate hike next month. I'm telling you, with the PCE the way it is, there's so much air cover for the Fed. This is a really good sign, actually, that's showing that from the health of the economy, not all of the indicators. There are some clouds on the horizon, but just the data on the consumer, and we'll find out next week with labor, which I expect to be very strong. We saw unemployment claims really good yesterday, better than expected. We're actually heading in the wrong direction. Inflation is going up. And I'm amazed that this report came out today that we had a 4.7%. Core is up 4.7%. And last year was a tough. I mean, we were up. This is over year, and it was up last year too. So this is. I mean, I'm surprised that it's up. And this is very clear indication that inflation is not coming down. The Fed is going to raise rates to get it under control. I just don't. So apparently that doesn't matter today, because there was a big jump in the probabilities over the past 2 days. We've gone from, maybe we're not going to do it to pretty sure we're going to do it. And the market is not going down. So are we in a good news is good news situation now? I don't mean, I guess technically, inflation going up is indication that, businesses are robust and they're able to pass along price increases. And I guess that's a good sign for the economy. We also saw a revision of GDP this week, revised up. So, I mean, there's definitely some disconnect in the overall narrative, because
So
I don't know what, there's a piece of the puzzle missing.
So in July, when PCE, because everything's doing what it's doing, Nvidia's blowing out earnings, Costco's up on earnings, the consumer sales, home prices are going back up again that I've seen. Home sales are increasing, which means rent to shelter is not going to come down. So when PCE comes in at 6% next month, and the Fed raises another 50 basis points instead of a quarter, will the market then finally slow down? I don't know. This is to me, there's a disconnect right now, and it makes it really hard, I believe, to be really confident in trading a directional bias in any position. Almost every position I'm opening right now has some type of non-directional bias, or at least part of my exit strategy is very flexible to say, okay, I'm bullish for the very, very short term because that's the momentum. But I know that can flip on a dime too. And I'm going to turn it back into another type of trade because I don't believe the rally either.
Yeah, that's what I'm with you on this. I don't, I feel like like I said, there's a piece of the puzzle that's missing. There's some component of the narrative that I'm not hearing. And maybe it is just all on, strong confidence that we get the debt ceiling resolved. I don't think we're going to. I think we're going to be talking about the debt ceiling to the middle of July. I'm not confident that we're going to get. I mean, I really want to, and I really think we should, and I'm really disappointed, and makes me want to write my congressman, and I think I probably will.
This on Wednesday, like I said in the daily market update, and I'll repeat it here, is that there's no reason for senators to act right now, and congressmen to act, because there's Janet Yellen saying we're going to run out of money. We already know that artificial debt limit is out there. They will continue to banter politically until we either get downgraded again, like we did in 2011, or until we default. Which
we saw Fitch issued a warning, a downgrade warning. I don't know if you saw that today or yesterday.
The market went up.
Yeah. The thing about the debt ceiling is we hit it, but then there's actually, if we wait a week or two, there's an influx of cash. And so we're able to get back to a margin where we can pay our bills again. So, and then that takes us to the end of July. So I don't know. It's I hope that we do the responsible thing, but I think the Republicans are definitely in a situation where they've got the control and they've got the power. If the Democrats want to dig their heels in and refuse to, negotiate, and we force ourselves into a recession, the finger will be pointed at Biden come election. So, he wouldn't negotiate, and, that's what's going to be said, whether you like it or not. So the Republicans, I think, are in the situation where they've got all the power here. And, I don't know how it's going to play out. But I don't have confidence that we're going to do the right thing. I think both parties know that we actually can hit the debt ceiling and it's not going to be the end of the world, that things will be okay for a little while. I know that I was reading something from David Kotok this morning. So he's of the mindset it's costing us $1 billion a day because it's not resolved. And I don't think I can explain his logic on that, but I get it. So I don't know. Yeah, we'll see what happens. The market is definitely acting weird, considering these two big things aren't clear, that the market is tearing higher when we've got big question marks. So I guess do they matter or not, or is there just something else? Like I said, there's something else going on. If you told me that what looks like we're going to raise rates, the Fed's going to raise rates, and we still haven't figured out this debt ceiling thing, I would say the market's going to be down. If you gave me a crystal ball and said on Friday, June 26th, if you knew this, what do you think what the market would be? I wouldn't say it's one of the biggest up days of the year. And that's what we got. So like I said,
Well,
I don't want to say the market's stupid. I want to say I'm stupid. I'm not smart enough to know what the issue is.
one thing I've learned over the long term is don't fight the Fed. And the Fed's actions are very clear that they're going to raise rates, and that's not to say that the market can't be irrationally bullish when the Fed is raising rates. It can be, but I think the key there is I agree with what you said. The market's, I'm not going to say stupid, it's just irrational. I think there's a lot of money that's been waiting to get put to work, and they're finding things to try to invest in on hope. But I think right now it's hope, and hope is not a good investing strategy. So I'm not buying right now. I'm, like I said before, I'm hedged on everything I'm doing. I'm short-term bullish on some things, but that can flip a switch for me and I'll go right back to short in the market again. But right now it's,
I don't think I'm in any collar trades, but I am in covered calls, which are
yeah,
calls
that's where I am too.
without long puts. And then I've got several hedge positions. I've got a long position in TLT and also TIP. Both are treasury related. And those are hedges. I've also got a long position in gold, and all of those trades are down a little bit. They're doing okay. And days like today, it makes me feel like, man, I should take that protection off. But I have to remember why I bought these trades. And that is that, if this thing, I'm not going to take them off until this is clear. And I'm okay losing money on those hedges, which is an interesting thing to talk about. As far as, do we talk about this on, I don't remember last week, but ways to hedge. I think we did. We talked about it last week. We did.
Yeah.
We talked about ways to hedge. And so there's a number of different ways. The only thing that we talked about last week that I don't have is SPX options or S&P 500 SPY options or something like that, which I'm glad I don't, because they wouldn't be doing really well right now. But with the VIX crashing back down, where are we on the VIX right now? It was back under 20. Yeah, we're at 17.9. Yeah, it crashed way down. It was like 19 this morning. It's 17.96, and it was a little bit lower than that. It was closer to 17 earlier in the day. So the VIX is coming way back down to this low level for the year. And what's actually, this is interesting. Maybe am I sharing my screen?
No.
This is noteworthy. And that is that the VIX futures are dropping rather steep too. So this, if you look at this, let's change this to a 6-month chart a little bit. So I've been concerned about the stickiness and the elevated, these red and blue lines, which are the VIX futures. December is red, September is blue, and this is the June VIX future. So the short-term VIX futures are coming down, but the fact that there's such a big gap and these are staying up, but actually pretty significant drop down on those VIX futures, which I'll keep an eye on. That could mean, I mean, this is making me wonder. I mean, it's just a very subtle move here, but I think it's noteworthy that this may be an indication that concerns about debt ceiling and the market's okay with Fed raising rates. Maybe that's what that's saying. If it is, look out.
The market cannot be okay with the Fed continuing to raise rates. It just can't be long term. The math of how to calculate a share price, that's what the Fed's trying to do. They've told us clearly.
Yeah.
We've got to slow down. We don't care about asset prices. We've got to slow down inflation. So I think we're just in a situation right now where the market's ignoring the actions of the Fed, and that always ends poorly.
Did you happen to see the Brookings Institute presentation this week? Ben Bernanke and there's another guy, Blanchard, I think his name. They published a paper.
I thought I saw a headline about Bernanke this week. I did not read specifically the Brookings thing, but he was essentially saying we need more QT, right? Inflation's still out of control.
No, this was vacancies divided by unemployment rate. And what he's done is he's gone back and in the paper, he published research showing how that correlates to inflation going down. And basically what he's saying is that we need vacancies to go down and unemployment to go up in order to get inflation back to 2%. And there's several different ratios. And yeah, we need to see a significant change in that ratio. The interpretation of that means is some of y'all need to lose their jobs in order for inflation to get back to where it needs to be. And we need to cancel some open recs to stop hiring people. Is a pretty strong conclusion. It's not very pleasant, but that was the gist. This is, it was on the, I'm on Brookings website right now, but I watched it this week. It's pretty, if you're into tech economics, I would highly recommend going back and taking a look at the recording. And I'm not seeing it on their website right now, but it was there earlier this week.
I'll do some digging, see if I can find it.
Yeah. So I mean, I don't know. It was like lessons learned. Yeah, it was called the lessons learned from, it's 4 years or 3 years of lessons learned. This is Fed's lessons learned from the past 3 years. Yeah, there you go. And then you can you can watch the video, but I mean, Jason Furman was there. Richard Clarida was there. And then of course, Bernanke and Blanchard were presenting, and it was that paper that I'll see if I can find the graph. Yeah, there you go. So this is so each one of these. So this is vacancies divided by unemployment, and so having vacancy having it be 0.8. So these are the model projections of how we get to inflation.
Sorry, were you talking to a chart you're sharing?
Oh, should I share my screen? Yeah, okay.
If you want to.
So this is the Fed. This is from the Brookings Institute. So it's lessons learned for the past 3 years. So this is Blanchard presenting, and what they're showing is 3 different curves here. This is vacancies divided by unemployment. So a high number means there's more vacancies and less unemployment. A low number means there's more unemployment and less vacancies. And this is showing how long it takes, based on this model that they created, how long it takes to get inflation back to where we need to be. And the point is that if we have, we need to get it under 1. I think currently it is 1.8. So they're saying there's no hope of getting inflation under control based on this model until people start losing jobs.
I
not a
don't
pleasant.
know that I disagree. I think I'm going to have to agree with that. So we'll wait and see, I guess.
Yeah. So in the face of that sort of stuff, hard to be bullish in the market, but yeah.
In the meantime, we
keep an eye on it and stay hedged.
Yep. All right, my friend. Well, it's good to talk to you again. Let's do it again.
Yeah. Next week. I've got a visitor for a month. My daughter's going on her honeymoon. Emily's going to Europe for a month. Her husband works for Epic. Did I tell you this?
You did. Yeah, that's awesome.
So we're going to be watching Sadie, and I don't know if you can hear her. She's barking right now.
No, she's
So I'm
good.
gonna have to go take care
This
of my
thing.
grand dog. I have 2 dogs that, they bark at the UPS people, but Sadie is a handful. So she's an awesome dog, but maybe you'll meet her in a future episode.
There you go. Okay. Thanks everybody for joining us. Don't forget, ask questions, like and subscribe, and we'll see you all at the next one. Thanks everybody.